Working with a multi-generation family, the elder members of the families were in their 80s, the middle generation was in their 50s and maybe early 60s, and the younger generation was quite spread out, as begins to occur in families. Some of them were little toddlers and others were in their late teens and early 20s. And it's fascinating to work with all of those different generations. People have very different needs. Typically the elder members of the family are somewhat less risk averse. The younger members of the family tend to have a very long time horizon. They will have an opportunity to benefit from the fruits of their investments over decades to come. So they had different needs, and yet they had a lot of different structures. They had trusts, they had individual accounts. All of these things needed to be invested in a thoughtful manner. And yet if they were invested in a completely fragmented way, each one on its own, they would not be able to optimize their investment solutions. So what we did was to organize what we referred to as an asset aggregation vehicle, brought all the assets together under one roof, allowed the decision makers to all sit around a table in an investment committee, make manager selections that were suitable and optimal given the resources that the family had, and yet let each of the different parties sitting around the table invest their assets in a different asset allocation suitable for where they are in their generational progression.